Aha, my friends, and today we're going to talk about how I managed to trade and pass the 200k FTMO challenge with my simple Forex trading strategy. I'll reveal it today. I am a Forex trader. I've been trading for the last 2 years, and currently I am still having a 9 to 5 job. I'm a medical assistant in a certain university. So I'm trying to run two things at the same time. The job is somehow demanding, and it got me some effects on my trading. Eventually, as we all know, that trading is so much, it's about, I actually regard trading as being about 70-80% psychology, and the rest is money management, risk management, and the strategy. So the strategy doesn't count that much. What counts the most is psychology, the time, how the time affects you. Because the job is demanding, I get busy, and yet I have to go back and trade. But amidst all this, let's come back to business. So I managed to, in the month of November to December, I managed to trade even during that period when I got some free time during that Christmas period, that festive season. I managed to pass the FTMO challenge, the challenge. But when I got the verification, unfortunately, the work had resumed. The work was too much, so I didn't make it. Because of the pressure, I had few trading days because most of the days I was committed. So I didn't make it. I managed to fail the challenge, the verification, but I passed the challenge. So in this video, I am going to explain how I managed to pass the challenge. The strategies, I'm going to break down exactly what I was doing throughout the strategy. But please don't forget to subscribe, to leave a comment, and please smash that like button if you like this video. And starting it all, trading is so much about confluence, it's about risk management, and it's about patience, discipline, and confidence. If you lack these, my friend, will get it so hard to succeed in it. So one thing I look at is one thing I really want to stress out as being a major point in trading. One of the biggest things is confluence. It's confluence. I'm sorry for the handwriting, but there's no problem. We will continue. So confluence is a big point. You need to put pieces together. But the fact that you only know maybe a single indicator is not enough. You need to add up things. Personally, I am not an indicator-based trader. I am a price action trader. I don't have anything on my charts. So, and the other thing is so much a good thing, which is risk management. You must ensure that your risk management will save you, because there is nothing else that can save you in this business other than psychology and risk management. You can have a strategy which is not good and win well, and make money. You can have a good strategy and lose money if your risk management is poor, because eventually, one day, you'll get losers, and that is inevitable in trading. And then the other thing is, of course, patience, discipline, and confidence to execute those trades. So, following all these things, please, this is what I used, basing on those things. So I'm going to break down the strategy that I used to pass the challenge. By the way, I took this challenge for about 16 days. It was around 16 days. So I passed it. But the problem is, of course, I got some challenges with it. Sometimes I was getting some problems with patience, because I would see that I have less time, and yet I have a lot of work to do at my workplace. So sometimes I would take some premature trades, and some I would lose trades that I was not meant to lose. but still, nevertheless, I managed to come back top. So one of the things, in fact, for me, I look at 5 things. I look at five different things in the market. 5. Number 1, I look at, the first thing is I look at the market analysis. I do my market analysis in the morning. That's number 1. I look at market analysis. I analyze my markets in the morning because I don't know what will happen throughout the day. So I have to go ahead and do my market analysis and then continue and go ahead with the normal business of the day as I'm waiting for opportunities throughout the day. Then the other thing I look at, I then go ahead and look at key levels, the market key levels, where the market can possibly turn. And then I look at the market structure. And then I look at the behavior at the key levels. And then I look at the momentum on the 15-minute. And then I draw down. This is what I follow. This is what I look at. So you can take a screenshot and then we can continue. So coming back to breaking it down, of course, like we have said, I look at my market analysis. I do my market analysis. I come up with 1 or 2 pairs to trade for the day. And then I come to the charts. I plot my key levels. For instance, here I would plot this key level. Potentially where the market would reverse. So when the market reverses like this, I wait for market behavior. Actually, what I look at is this. Can you see here? This was a key level. The market came back here and reacted and pushed back down to the downside. This is a key level. When the market came back here, of course, not in trading. No. It's not that everything will work all the time, but in most cases, chances are, with the strategy I use, my win rate is close to around 70%, 60 to 70%, and that's a huge win rate. That's big. Because if you have a risk reward, of which I use a minimum risk reward of 1 to 2.5, 2.5 reward. So if I have a win rate of about 50%, I am far away. All I need is about a win rate of around 40%. I'm fine. But so if it goes beyond that, then I'm perfect. So here, when the market comes here, we look at behavior. What we call behavior is we look at depletion of the bearish pressure, depleting, creating weak rejections in and around this area. Can you see here? In and around this area, creating weak rejections, and then we look at strong bullish candles coming into breaking these key levels. Here, we never saw them breaking. Here, bears came back and tried to push market down. They failed. Weak rejections. Bulls came back and then broke again. Here, let's say you would have taken a trade here at this key level, and you do. Let's see. Let's mark out this level and we see what happened here. After breaking that key level. See, the market continued to the top. the market continued to the top. So I will take this, perhaps could have been either break-even trade or something, because I take 1 to 2.5 minimum. So continuing, so the market, at least perhaps there could have gotten a break-even. So I rarely take those losses. Coming here, look at these key levels. The market still came back and did what? And turned at the same key level. Look, still the market turned. How do we look at key levels? We look at key levels are points where the market is turning, has turned previously, the points where we have a lot of weak rejections. That is a point. You can mark out that point, and then you can anticipate that market, when the market comes back there, it has a potential of turning. Of course, it may not turn. We don't dictate on what the market does. What we do is, I like to say this, that the market is like the waves in a water body. So you have to move with the flow. Where it goes, you go. Where it stops, you stop. You can't force it. So here at the same key level here, did you see at this key level, the market again came back, depleted. When the market depleted at this key level, look at what happened. Just look at what happened. The bears came up, depleted at this point, and then the bulls broke back to show signs of strength. And then what happened? This is a structure. These are key levels. Now you now start studying structure, behavior. Behavior is the behavior in around this area is showing us that the market, the bears are depleted, the bulls have stepped in. Are you seeing? The bearish candles are small, they are weak rejections. The bullish candles are huge. Look, when they come up, they break those key levels. So now you start to study the market structure. The market is now starting to make higher highs and higher lows. If you go to a lower time frame, you will see the market doing this. I think I can show you what I am meaning here. Let me show you. This area. Let me show you that area. Let's go to about 30-minute time frame. And I show you a lower time frame, and you see what the market is doing at that area after tapping these key levels. Look at what the market is doing. Structure. Market is breaking structure. See? The market is breaking structure. The bulls are in the game. See, this is a key level, broken. This is a key level, broken. This is a key level. See? You would have collected some good money from this area. That is, if you want to call them money. But I don't trade with a mindset of looking for money. I trade with a mindset of R. In fact, it is usually better. I always advise my students to, instead of computing it in $2 value, you call them R, of course. So when you risk 1%, you call it 1R. You don't call it 1%. So going back to the 3 hour, what I actually do is I look at these markets on the 3 hour, then I come back down. I use different time frames, 2 time frames only to trade. So you can now see what I was saying, that the market is strictly looking for what we have seen. The market is just breaking structures. It's going to the top. It's breaking structures. It's breaking structures, going to the top. Look at what happened. You see, market structure is unique that it repeats itself. It just doesn't care. It repeats itself every day. Every day. The market repeats it. I can bet my hand on it. The market will never do anything new. It does the same thing over and over and over again. Look here. The market comes back here. This here, you see, this is another key level to the top. And then I'm not a reversal trader, so I don't trade a market that just comes to a key level and I just start selling. I don't sell blindly. I look for confluence. You see, I'm studying. We are breaking down this market structure piece by piece. So my market comes back here, creating higher highs and higher lows. Market structure breaking and creating highs. Did you see that on 30 minutes? So the market comes back here, and look, if you only had one chance, just one chance, and they told you, they put a gun pointer to your head and they told you, okay, let's do this. If they give you just one chance, and I asked you one question, if they put a gun at your head and asked you that after this bullish big candle that you're looking at, this big green candle, what candle would you expect to come next? Of course, there is none other than, let me hear from your comments, a green candle, because this candle is huge. But look what happened afterwards. Big, matched by a big red candle, breaking and smashing everything that is around it. It smashed these key levels back to the downside. Did you see that? Have you just seen that? What does that tell you? At the moment the market approached this key level, reaction, the bulls got depleted at once, matched by strong bearish pressure, breaking down the bulls. What does that tell you? It tells you that something is up. Something is up. So what next? What next do? You look for another confluence. I just don't trade with just two confluences. I look at the market analysis. I look at those key levels. I look at how the market structure has been playing to the key levels. And then I go ahead and look at the behavior at the key levels. And that is the behavior. That's what the behavior is at the key level. The market the bulls have depleted. The bears have come in strongly and overtaken the bulls. What next am I going to look for? I'm going to go down to the 15-minute and start looking for patterns. Look for momentum. I call them momentum patterns. See? So, after seeing this big red candle, I plot my levels and I was like, okay, fine. After that big candle, the next thing I'm going to look for is patterns on the 15-minute. So I now chop down back to the 15-minute. I go to the 15-minute. On the 15-minute, what am I now looking for? The only pattern I look for is a double top and double bottom. That's all I trade. I trade a double top and a double bottom. That is all I trade for. Listen, again, for the second time, for the third time. When the market came back here, I want to show you something here. When the market, you see, this is that's where we are at. You see, these are key levels. I trade a market with a 50% to 100% retracement, but with a double bottom, double top patterns on the 15-minute. So at this key level, I am now waiting for the market to come back to this area, between this area and this area. Did you see that? This area here. So what am I going to do? I'm going to mark out my key levels again. This time, I'll mark out this key level and say, okay, the moment the market comes back to this area, I'm going to sell it. I am going to sell it. So when the market came back to that key level, what did I do? To that area, I look for, again, depletion in bullish pressure. I will look for market to break, start to push. After the market has started to push to that key level, the bulls starting to push to that key level, I look for the bulls behavior. I look for now the bulls behavior to deplete, creating weak rejections like you are seeing this one. Weak rejections, depletion in volume in the bulls, and then stepping in of the bears or the sellers. So I will wait for that to happen. So when the sellers stepped in on this candle, I now go ahead and place my entry order. And by the way, I trade with stop orders. Why do I trade with stop orders? I've come to realize one thing in the market, that in most cases, when you trade with stop orders, you tend to, it is much easier. Sometimes I have an advantage, another confluence that comes up, because when I trade with stop orders, sometimes I don't get filled, and when I don't get filled, the market is going against me and I don't get filled. So here, 1 2 3, tap. That is how I trade. And this doesn't mean that I don't lose trades. I do. I lose trades. I lose trades. I lose about to 50% of the trades that I place. But I am profitable at the end of the day. So I look forward to continue doing the same thing. I failed the challenge, the verification. I failed the verification. I passed the challenge, but then went ahead because of pressure and less work, less time for trading. I didn't manage to pass the verification. So, but I'm really thinking, please leave a comment. I'm debating, seeing if I should go ahead and place another challenge, or I should just come up with another challenge. There's actually a challenge that some of my students are asking me to take on, and it is a challenge of growing an account from $300 to, you can look at it, growing an account from $300 to $100,000 in 12 months. So I am anticipating, if I'm going to start this challenge, it might be in the month of February or March, because that's what when I anticipate that I might have some more time of my work. So I want to start a challenge on a good note. I don't want to start that challenge on a bad note. I want to start it when I have enough time, so I can be able to gain enough momentum. So traders, if you like this video, please subscribe, smash that like button, and please leave a comment. And I want to see which side will win. Should we go for the challenge, or should we go for an FTMO challenge, or should we take the $100 to the $300 to $100,000 challenge in a space of 12 months? Because there's one thing I think I will share with you in the next video about how I perceive FTMO or funded accounts as compared to personal accounts. In fact, I don't have a bias on funded accounts, but I see a personal account grows much faster than a funded account, with less stress, with less pressure, with less restrictions, So that is one of the things. So please smash the like button, subscribe, and we'll be back again in the next few days. And the other thing is, I'm going to come up with a schedule on how I'm going to be posting these videos. At least every week we'll be having about 2 to 3 videos every week. And the other thing is, I'll be posting at least the videos on the trades I will be taking on a daily basis. Of course, some days I don't trade. So, but for the days that when I'll be trading, at least the bare minimum is that every week, every day, every morning, at least I'll be leaving a link on, not a link, but a highlight on the pair and the bias of that day that I'll be looking to do, either to buy or to sell. And then if I take the trade, whether or not I win or I lose, or it's a break-even trade, I'll still post it at the end of the day on this YouTube channel. So please watch out. Just to be the first one to catch that, please subscribe and leave a comment. Peace be unto you. May the good Lord be with you. Thank you.